Nuresh Mirani, our expert, joins in to answer all the stock queries. And also with us is Tanveer Alam, who will be answering all the personal finance queries this afternoon. Good afternoon, gentlemen. Thanks very much for joining in. First up, we will talk about the stock which is in focus. Sunil Kumar calls in from Delhi, and he wants to talk about his investments in Sun Pharma. Hi, Sunil.
Yeah, hi.
Hi, how are you? What's your question?
My question is that you purchased the
Okay.
And our target is about 1,000.
Okay, so you're then, I'm guessing a long-term investor?
Yes.
Okay, so if you're advised to remain invested in that stock, it's not a problem. You don't need the funds currently.
Yeah.
Okay. There's a lot of fundamental news flow actually on this stock as well. So first, let's just get that out of the way. The Competition Commission of India has cleared the merger of Sun Pharma and Ranbaxy, which is the reason why you're seeing that bit of an up move in both the stocks today. There's some riders, but a lot of the analysts are now saying that they will not materially impact the stocks because the divestment of 7 brands that has been called for have a cumulative sales of just about 50 odd crores. So not a major impact on the merged entity. But for the technical view, Nuresh, let me come to you. Our caller has bought it at roughly about 800 rupees odd. What's the advice now for someone who's a long-term investor? The target that he has in mind is 1,000 rupees. What's your call on when the stock could see those levels?
Yeah, like my view on Sun Pharma is this is a stock which has been in a long-term uptrend and has continued to do well and continues to dip around 10-12% from the recent tops, which in that zone comes to around 800 to 830 zones where it is currently right now. So I would say continue to hold on, and the next move could be closer to 920 to 950, and that is where the investor should look into reviewing the stance. But if he is of a view where he can hold it for a year or two, I would not look at a target price but keep on holding on to the stock.
All right, then, so in the long term, the stock's looking quite good. In fact, and the first target should be at around 920 bucks. That's a good 10% away from current levels. But let's go to our next call. It's going to be quite an interesting one because Swadesh calls us from Bhopal, and she has some investments in Spicejet. Hi, Swadesh.
Hi.
Hi, how can we help you?
Hi. Yeah. Hello.
What's your query, sir?
Yeah, actually, I'm holding the 3,500 Spicejet from last 3 years at the rate 24.
Okay, 3,500 shares.
3,700 shares, and I have seen the rate 45 also. But now there are so many bad news. So my question is that whether I should hold on or I should book loss.
That's right, Swadesh. In fact, that stock has only been moving down in the last few weeks after moving towards the 2021 odd levels. But let's get you a quick opinion with regard to this. Nuresh, what do you think? Spicejet, what's going on with that stock? Are there any hopes whatsoever of the deal? Should he hang in there because he's bought it at 24 rupees? Currently, the stock is at around 15 rupees. What should he do?
So technically, when we look at this stock, it has been in a long-term downtrend for very long. But a different change which was seen in the last couple of weeks is there was huge volume action and price action. Even though the stock went into the 20s, is back to 15 rupees. And the investor has been holding for the last 3 years. What I would suggest is keep patient for some 6 months and keep a stop loss at 13, which is a long-term support zone, which has been made in the last few months. So if it continues to hold on about 13 to 14 levels, we could again be looking towards 20-25 zones and maybe keep trailing stop losses going ahead. So I would say hold on for some time with a lot of price and volume action. And given that Jet Airways has also moved up 50%, maybe we'll see some catch up in Spicejet. So as of now, keep a hold but review at 25 levels.
All right, that's the advice on Spicejet. For the moment, it's a hold that Nuresh is recommending. But when the stock reaches levels of 25 is when you perhaps might want to revisit the advice given. And finally, we have also a query which has been sent to us by Chandan Mehta, who writes to us from Mumbai. He says he's a retired person. His annual income is primarily from pension as well as the interest that accrues on his fixed deposit. So it's accumulatively, it's less than about 2 lakh rupees. So he now wants to know if he should file his income tax returns. Tanveer?
Yeah, I think I know even if the income tax his earning is below the taxable limit, I would suggest that he files his tax returns. It does not take much of an effort. It comes at a very simple exercise of 10-15 minutes. But the advantage of that filing of tax return is typically a lot of these retiree people invest in fixed deposit. And when you invest in fixed deposit, certain amount of tax gets deducted at source. And what happens when you file those returns, you have a possibility of recovering those TDS refunds. And hence, it becomes much more better for those people also who do not fall in the taxable bracket.
Sumit Badola writes to us from Dehradun. He wants to know whether it is better to buy a term plan or a traditional insurance policy, and what should be the ideal cover he should buy. So let's go to Tanveer. Tanveer, could you help him out?
Yeah. See, term plan is always a better way of actually covering your own risk. Typically, insurance and investment don't mix well together. So whether you buy traditional endowment or money back policies or even the ULIPs, they are not good investments. The better way to cover risk would be through a term insurance plan. And there is a way of calculating human life value, but if you can't do that, a simple thumb rule is that you must have a risk cover of at least 10 times of your annual earnings as a risk cover. So go and buy 10 times of your annual earnings online term insurance plan.
Okay, so that makes sense actually, Tanveer. So for our viewers, Sumit, I hope you were listening to that. If your annual income is about 1 lakh, you need to buy a cover which is 10 times the value of that. Up next, we have a caller who wants to talk about Ashok Leyland. Anant Pawar has called in from Pune. Hi, Anant.
Hi, this is good afternoon. This is Anant Pawar calling from Pune.
Hi, good afternoon. What's your question?
Yeah. First of all, I would like to congratulate your channel for completing 15 years in Indian Business Channel.
That's really nice. Thank you so much, Anand. We really appreciate your wishes, and thanks so much for staying with us.
Yeah. I want advice about Ashok Leyland. I have Ashok Leyland at the price of 25 rupees.
Okay.
And the quantity is around 200. And I want to add some more. So what will be your advice?
Okay, Nuresh, the stock Ashok Leyland has doubled from the time that he bought it, so he's making a tidy sum on it. But is it a good time for him to be averaging a little bit, or do you think it might be prudent to book a little profits now?
See, technically, the view is very positive on Ashok Leyland if one has a view of the next 1 year or at least 6 to 12 months. What we see, the stock has given a major breakout above 48 levels, which was a resistance zone for a long time. So I would suggest a buy at 48.50 with a medium to longer term view. So I would suggest an add at current levels itself.
All right, then that's the view coming in on Ashok Leyland. Nuresh says that maybe you could add even at current levels. But let's go to our next call. In fact, it's a SMS we're receiving. Prashant Mohan writes to us from Pune. He has 500 shares of GVK Power Infrastructure at around 45 rupees. He wants to know whether or not to hold or to sell that particular stock. Oof. So Prashant has definitely not got in at a good price, and he's sitting on big losses. Nuresh, what should he do? It's only a $10 stock. Might as well hang in there and hope for some kind of bounce, or should he sell out immediately?
So technically, these stocks have been in terrible downtrends, and they have continued the fall over the last 3-4 years. Now what we see is, for example, if you look at GVK Power, it has made a lot of bottoms around 8 to 9 rupees. It is difficult to take a call whether the stock will bounce from here to 15-20 levels, but in between, whenever there is an action towards 15 to 20 is where the investor can book out. So for example, in the post-election move, the stock did go up to those zones. So what I believe at current levels, I would say one can hold on. But at any bounce back to 15 to 20, you can exit and get into better stocks.
Mehul Mathur has called us with a query on Idea Cellular. Hi, Mehul.
Hello.
Hi, what's your question?
I'm looking forward to enter in Idea Cellular Limited.
Okay.
My query is it the right time to enter in this stock, and what would be the stop loss and target for short term?
Okay, and any particular reason that you have narrowed down on Idea, or are you looking at a telecom stock, or are you just looking at a good investment? I mean, a good trading
stock.
Call. I'm sorry?
I'm looking at telecom stocks.
Okay. Nuresh Mehul wants to talk about, a good trading idea from the telecom pack. So he's narrowed down on Idea. Is Idea the best play currently in that space? Would you advise him for the short term, and what would be the target and stop loss there?
Like if we look at Idea, what has happened over the last few days, the stock has fallen from 160 zones to 145. So now it's been in a short-term downtrend, but it has been in a range-bound stock for the last few months, wherein 140 is the lower zone and 165, 170 is the higher zone. Now when we try to bottom pick a stock, we really don't know when it will bounce back, but we can only look at the risk rewards in the situation. So what we see as 140 to 145 as the buying zone and a stop loss closer to 139 and a bounce back towards 160, 165. So the time frame could be difficult to predict, but we could be looking at, say, a view of 1 to 3 months. So that is what is the view on the stock right now.
All right, then that's the view coming in on Idea. That stock, in fact, has taken a bit of a badgering. If you just look at it, you pull up a wider time horizon, you'll see that, in fact, I think for the last 1 month, it's down roughly around 15% odd. So clearly, it's been one of those big underperforming stocks. Even in strong markets, I've seen that stock end down by close to around 4%. In fact, in the last 1 month, it's down a good 13% odd. But let's go to our next personal finance query. Rakesh Jha writes to us from Patna. He invests around 1,000 rupees per month in a number of funds. The funds are DSP BlackRock, SBI FMCG, Reliance Equity, HDFC Top 200, HDFC Midcap Opportunities, as well as SBI Gold Fund. He wants to know whether or not he should continue investing in the same way. Tanveer, you can help him out. He's in fact allocated $1,000 each to all these funds. He's diversified himself at least by looking at these funds. Should he continue in the same manner?
Actually I would like to restructure the portfolio. In fact, there's a common myth amongst people that they tend to diversify in mutual fund across various sectors and various schemes. See, generally a diversification is a measure of risk reduction. And if you over-diversify in any fund, you're basically trying to diversify your risk, and hence your return becomes suboptimal. A better way to actually get a complete broad perspective of the market would be to choose a very consistent and a regular performing funds, one in large cap space, one in mid cap space, one in small cap. This way you complete the entire basket of funds in the equity space, and I would choose 3 funds for him. One would be ICICI focused blue chip in the large cap space, HDFC mid cap opportunity fund in the mid cap space, and a Franklin smaller companies fund in the small cap space. This will give him the complete overview of the entire equity space. Now, having said that, there is a good opportunity which is coming in the debt space. I would like him to play that particular space through ICICI Balance Advantage Fund. So what happens, you can see the correction that's happening in the equity market. Okay, this will help him to actually buy low and sell high through that particular space, and also take a good opportunity which is coming on from the debt space. Because of the reduction in interest rate, the bond fund is expected to do well also. So these 4 funds typically should be good enough for him.